Good morning, sunshine.
Welcome to the real world. Whoa!
Mortgage your house and buy Bitcoin with
Breathe air.
there's no second best, okay?
It always makes me laugh whenever he says breathe air. So, breathe air. GM. Excuse me. Today is Saturday, 17th of August, and we're going to do trade of the day. And I mentioned this yesterday. When price has a sudden move down into an area of liquidity, it can often tend to move up back into the breakdown. So the origin of the move gets revisited. We've done that. Now, there's a lot of talk about the build-up of Bitcoin open interest, which you can see here. If I zoom it out a little bit and you look at open interest, we take off everything else and we just look at OI. Big build-up of open interest, probably 148 to 170, 22,000 contracts of a build-up. And overall, open interest is declining. If I go to a 4-hour chart, we can see this. Open interest is declining, which literally means people are leaving the market. Now, this recent build-up can absolutely resolve to the upside. But what you're looking at then is it just a move to move price to an area where spot sellers can step back in? And the first thing I look at is resistance. So if it doesn't stop here, it could stop there. If it doesn't stop there, you're watching the highs. And of course, if it doesn't stop there, then you're probably moving into an area where Bitcoin can trend towards 70 or even 74. So one of the things that's really important to remember is that if this is a bearish market, it can go way higher. And it probably will. It can go to 70. It can go to 74. A lot of times you think, okay, market's probably bearish, we're going to go lower. But it doesn't just go lower straight away. It will keep bouncing. People will keep buying the dip until they give up, like I mentioned on daily levels. So, we avoided a breakdown on Friday. Good. Good from a perspective of no immediate breakdown. But we're into resistance, price reversing, and we need to see where it goes next. Is it going to fill that? Or are we going to lose 58 and be absolutely bearish if we lose 58? Right? That's the area where it gets bearish. And if it goes higher, let it go higher, because people will fade this all the way. It can squeeze and squeeze and squeeze and squeeze. If you're actually, so that to me, that's not a great path to see. If you're a bull, you want to see this. That's what you want to see. You want to see price go sideways, 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 sideways. Build, 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 build. That's a much better bullish sign as price is showing an attempt to break lower and it doesn't. It builds and builds and builds. It builds a base and it can break out from it. A strong rally can just be a squeeze. Obviously, dropping down is bearish. So I think the thing you want to see if you're a bull is actually price to not do much for the next few weeks. And then some new catalyst to come along that can push us to new highs. Most of the catalysts right now is basically people saying, oh, well, liquidity is going to get better. Global liquidity is going to rise. The Fed are going to print. But the Fed aren't printing. They're literally doing the opposite. They're doing QT, not QE. So rate cuts are coming, yes. But that's priced in, right? Literally everybody expects rate cuts. So the most bullish thing would be a long, drawn-out rate-cutting cycle where it goes lower and lower and lower, which means borrowing gets cheaper and cheaper and cheaper, and that encourages people to leave things like money market funds, where you can just buy government bonds and get 5%, And that becomes less attractive if interest rates drop to 4, to 3, to 2. And then people are saying, well, where do I put my money? If I can't just put it into risk-free fucking T-bills, then I go to assets, stocks, and crypto. So that's not happening yet. And until that, I think what we're seeing is what you should see. And I've talked about this, so we'll try to keep it relevant for today. It's a Saturday. Saturday is the worst day of the week in terms of trading opportunities. If you backtest and go study Saturdays, they provide the least volatility and the lowest returns. Sunday, even though it's still a weekend, can actually be okay because when you get into Sunday, people start to front run the next week and, price can move a bit more. But Saturday is generally a day to work, to build, to review, to journal, to catch up. And that's why Saturdays I do the weekend workshop, right? And there's not a whole lot more to say other than that. So I'll probably leave it here. See you on weekend workshop, 4 p.m. UTC. And that's about it. Don't expect a whole lot to happen. It's Saturday. And that's it. GM, see you later.